Hello, 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 good morning, good afternoon. Welcome to another ES Futures Trading stream. Today is Monday, today is July 17, it is 12:07 Eastern Time. I just did the market update a couple months ago, but I just realized the whole stream was mute, was mute. So I'm doing it again. I started early. Around 11:30 because I wanted to highlight something here. The stream risk that the market, that the long position has now. There's a stream risk to be long here. It doesn't mean I'm going to go short, okay? It doesn't mean I'm going to go short, especially now that we have this. Notice how volume is here. Volume is really low. The higher the market was going, the lower volume was. Volume was decreasing. And now it's starting to pick up a little bit. It's starting to pick up a little bit, but still lower relative to Friday. We have a trending market. We have a trending market to the upside. We have some volume here now in this area. We have 10,000s here, but no big blocks here. No big blocks in the same way as the market has big blocks in this area, for example. These areas are in this blue here. I remember there was some 10,000 blocks here. Not volume, no accumulated volume, but blocks, right? There were 2-3 trades which 3,000 each one, which has 3,000 each one, which had 3,000 each one here. There's over 1,000 contracts traded at once here. Today, I don't have that. There's something that I started to appear here. I remember when I start having this could be the end. Now, why I would like to be long? The last thing I want to be here is long. I didn't do any kind of stream in the morning because I had this bias, right? I was looking at this possibility that the market was too short here. The market overnight inventory is 100% short, being bought from this area, so high volume area here, and then from this area in the overnight, and opening, but the opening was right, I said. And when the market took a high, which is the overnight high out, and I guess it didn't get inside value area. That's not price, but so I was looking here, before the market opened. I was looking for a trade here, from some kind of downside continuation here. I decided to be focused in the market rather than doing a stream, thinking that the market have some definition here from Friday, some downside continuation. I decided to have a stop entry here because the market was struggling to go to the upside here, building volume here, right? Volume here. In the same way how this market was going higher, in the same way how the market built value, got a lot of volume here, got some volume here as well. I'm watching this market, for example, here, lower prices being rejected. Now market's opening lower here, higher prices being rejected, and now the market opening at the lower side of Friday's. There could be something here. We can have some range here, some potential of having a trade range, but with the potential trade aiming, to this area here and having these levels to monitor for continuation, having last overnight hardback, overnight very prominent overnight POC, Friday's low being basically bought from POC, previous day POC, and the ultimate destination, this area here. That was the trade. It didn't even get to my stop entry. I was going to go short here with a short stop, with a tight stop here, right? But what I want to see is a downside continuation. And I decided to do that where the market, start to buy in from previous day overnight high, start to did at least once was bought from seller. And I thought, okay, if there is something here, if there could be something here to the downside. All right. Remember, value is higher. On Friday, even though the downside movement, value was still higher. And at the time, value was overlapping to lower, but very early in the session to be considered value. Now, this is much better now. Because we have 1, 2, 3, 4, 5, 6 periods. And value is pretty much inside. It's overlapping to lower. Notice how this market has a rally. This is a trending market now. And value is still overlapping to lower. Okay. Now, overnight inventory, 100% short. Volume, there's no volume. Okay. If this is something serious to the upside, I would love to see some volume back in the market, but there's no volume. This looks more like a counteraction to overnight inventory rather than a more convincing upside movement, rather than more new buying going on here. There's not new buying here. This is a counteraction to overnight inventory. And probably to this short day from Friday. Notice how Friday, we had this market to the downside, but one time frame in lower ending multiple times in the day. Okay? Ends here, it keeps going low, ends here, and this low here or this high here was exactly held back to the tick. Okay, this was a potential destination or something here. Okay, in the same way as this day, Thursday was bought from held back here, exactly held back here. This was bought. All this movement came from held back. All this movement came from held back. Okay. Very questionable days, back to back. This one to the upside, and this one to the downside. Which one was going to be corrected? Okay. First. No. I had a bias to the downside. I happen to have a bias to the downside, but acknowledge what helps here. What is that help us to manage risk or to assign risk to any position that we get into or we can get into is the appreciation we have of the market. All right. We have overnight inventory 100% short, and the market is just trending to the upside. Here, when the market was up here, I consider this being long is the last thing I want to be in this market, because the risk to me is very high. Very high. It doesn't mean the market is going to break. It doesn't mean I'm going to go short. I'm going to be short. It doesn't mean that. It's just the risk of being long is high. Also, there's a lot of back and forth, right? There's a lot of chop here today as well. The closer, what was my risk assessment, right? When I have this bias here is, when the market opens inside previous range, the good odds are that the market is going to be a rotational market. The closer the market is to the center of the previous day, the higher the odds of chop. Okay? So far, I would say no, those things are played out. This is not a rotational market. This is a motional market. Notice how this third distribution on the upper side has been closed. Now we have only two distributions, but we have no excess here. This market could be or can be too long now, can be getting too long. But this is trending. The overall assessment is this is a trending market to the upside. And the last thing I want to be is to trade or is to be against the trend. You don't step in front of trend here. From the previous day, histograms, I have this volume here, which could be the target. Market already took this volume out, which this was held back, remember. Not just that, market also took this high volume. The next thing on the upside, notice how we have volume here and higher the range or this profile here. We have volume here, but not the same as this over here. We kind of lower volume here, and there's another accumulation volume up here. Can the market trade back up here? Keep going to this area here. This rally high doesn't matter. This is from way back from April, I believe. I was using that on this day. Which is irrelevant actually. It's too far back. It has zero weight. Okay, not too much weight. No, minimal weight actually. Here, when the market open, again, let me show you something. Because I see this quite often. That can be very useful. I realized it was very useful for trading. It is very useful for trading. You have the histograms here. Notice how volume dries here, right? Just dries here. Dries here. It's not happening the same thing. We have some volume here in the lower side. The market is not drying. Is actually getting some volume. The market is forming something like this, right? The market is doing this, right? Here, and now it's doing this. Notice how more volume is being attracted. When the market goes lower, there's more volume there. Look at that, no excess here. No excess here, so no excess here. This market could be too long here. And what I wanted to highlight is this low here. Now has been revisited, right? But when the market opened, it just did this. Oh, come on. Let's do it again. We can have a spike to the downside here. Let's check what's going on in this market here. Well, I want to see the market. If the market closes this distribution, closing the distribution here can target this low here, the opposite side of this range. Okay, one time frame lower as ended here. This means the end of one time frame lower here. Alright. Now, this downside movement did something. Did you notice what this downside movement did? It actually moved value higher. Value was lower, was overlapping to lower. Now we have inside value. We have a balance. This downside movement actually is this is how counterintuitive this is. It's better for the upside movement. In a very, very, very short time frame though. Okay? Very short time frame. if this movement happened when this period was opening, now we are 3/4 into the period, but it was in the first 2-3 minutes. They were good also. This could have a better odds having downside continuation here, or at least to close the gap, or maybe going back to hard back here. Remember, my time frame is shorter. There's a very short time frame. Jim has a bigger time frame, but Jim is a short-term trader as well, but his time frame is bigger than mine. He monitors, he sees, he may see, or I can see the same thing that he does. He has better connections. He has more information than I do. We just adjust. Right? I have my opinion, and he has his. We trade the same market. We all trade the same market, and we all may have different opinions. The thing is, when you have your own opinion, you can be wrong or you can be right. Right? But you will know when you are right, and you will know when you are wrong. If you trade based on what I say or based on what Jim says, how do you know you're wrong? Because it's not your thinking. It's somebody else's thinking. And the goal here is to develop our own thinking or our own appreciation of the market. That, for me, it's very important. That's what I got from Jim. Right? An own appreciation of market. It's not that I disregard what he says. It's just we use the same information in different ways. But the goal is to develop our own appreciation, of the market. And we will be wrong more times than we will be right. But having a market appreciation will make us realize when we are wrong fast, right? And not just to get attached or not to fall in love with one's position, with the position that we have, right? Oh, now I can go back to from the open. This happens all the time. We have a market that open like this. It has really kind of like narrow here, something like that, and start building something here. In this, I am talking about this period, right at the open, something like that. When I see stuff like this happening at the lower side, I question this law. I thought they were good. Also, the market come back to check these lows, and because what I want to see is the volume dry when the market goes to the downside or goes to the upside. Because this is nothing. This is just nothing here. This is just lack of sellers here, right? Not heavy presence of buyer. So there's nothing definitive here. But when the market, when the next thing, when the market, we got this, right? This was very narrow at the time, was something like that. And when the market trade up here, right, in this area here, like this, and then comes down, the market actually starts to dry here, until this selling this, and this is what I want to see. Right? It didn't happen here, for example. No, it happened here. It happened here. It happened here. Okay, it wasn't happening here because we saw accumulation of volume here. The market's going lower, and having this thing. Now what's going on now? This is getting quite dangerous to the downside now. We can see the accumulation on the lower side here. I remember when also the next thing, when I saw this thing, it could be the end of the upside movement, but It's questionable. There's no excess in the high. That high is not good. But this is the end of one time frame higher. With good odds keep coming to the top. But it seems that this market has got too long here. Now let's check if this market closes this distribution here. What's happening with volume? 27 is increasing a little bit, some pickup, some volume is picking up a little bit here. PA market is 3 periods wide here now. If the market comes back to here, it will be 4. If the market comes back to here, it will make 5 wide, which makes harder for the market now to move POC higher. In this case, higher because market is going to the upside. Are you interested in seeing the ability of the market to move POC higher? This is not a trending market anymore. Okay, rotation. There's some rotation here in this market. One time frame higher ended early in the session. Okay, early in the session, so there's nothing serious to the upside. We knew that the odds were high. Okay, unless there's any questions, I guess that's going to be it for today. The risk of being long is very high, or was very high here. The market was going higher. I just want to state that. That's why I did this. Update yearly, but unfortunately, the first stream I made was I didn't realize I was muted. I was in mute. I was talking for like 30 minutes with the mic muted. I'm so sorry. That's why I had to do another one again. All right. I wish you guys good rest of the day. Stay safe. We see you tomorrow. And my focus before I go, my focus is the market's ability to close this distribution here. Yeah? And it's interested in see if markets builds value in this area here, right? Which will be more, we have all signs were pointing that this was just a reaction or counter-reaction to 100% or short overnight, 100% short overnight inventory. Okay, all right. Stay safe. Good luck for the rest of the day. See you tomorrow. Bye-bye.